You're welcome to my YouTube channel. If you're new to this channel, kindly hit the subscribe button and turn on the notification bell to be notified whenever I drop any video. If you are also an existing viewer, you're welcome back to this video. So in this video, I quickly want to do a recap of a trade I took yesterday night. I took this trade on this instrument yesterday night, and I want to do a recap of why I took the trade, how I took the trade, how I analyzed the trade, and also I'm going to be showing you the profits of the trade, so that and I'm going to show you where I went out of the trade, because as you can see, the market is retracing back heavily. The market is moving back impulsively, so I'm going to be showing you how I took out the trade and why I actually took out the trade at that point. So I'm going to be showing you the before and after of the trade. So this is the before of the trade. I analyzed this trade and I picked out two POIs. As you can see, if the first POI is violated, I am not expecting the other to be violated. If the other is violated, it simply means I have a break of structure. Then I'm going to be looking out for the POI the market is about to go mitigate. So I marked out those two POIs, and this is the result. This was when the market started selling. And yeah, so as you can see, I put my TP. The first place I put the TP was where I eventually took out all of the trades. That was where I eventually took out all of the positions I opened, and also this was the profits that was made. This was the profits made from trading that instruments. You can see it here. This is $819. So I'm going to just be showing you how I analyzed everything, and then this is actually the profit made. This is the profit made. All right guys, so let's go into it. So I'm going, like I always say, you should start your analysis from a very higher time frame, a higher perspective, so that you can be able to know what the market is saying. You can be able to decode what the market is telling you. So you need to start your analysis from the higher time frame. But I already knew the movement or the other flow of this market, so I just jumped to the H1 time frame, because this is the instrument I most trade. I love this instrument a lot because it follows structure, and then it follows my strategy. So I trade this instrument the most. So I already know what the higher time frame order flow is, so I just jumped to the H1 time frame, and then I started analyzing to up down to 5 minutes time frame. So I eventually took the trade on the 5 minutes time frame. So you just have to go to the higher time frame and know the perspective of what the market is giving you. So as you can see here, we are in a downtrend in this particular market, and our last break of structure was to the downside on the daily time frame. We had the last break of structure to the downside, which was here. Markets broke to the downside, and it was here. So I'm going to be making this stick to my chart. So I'm just going to be doing this, so this is going to stick to my chart even when I go off. So this was the last break of structure, and then the market came back to my internal structure to mitigate the structure. So it is giving me a go ahead that I should look for a sell move. Now we still have an unmitigated zone, but I can't just expect the market to jump into the unmitigated zone all of a sudden. The market will stop at a valid internal structure before going back deep into the internal structure. So I'm just going to be trading the stopover. I'm going to trade where the market is just going to give me entry confirmation at the stopover. So this is one of the stopover of the market. So, and then I am saying it that it is a valid POI, so I'm just going to mark that out. After marking that out, I'm going to go to my H4 time frame, and then I'm going to check the last break of structure. So when we got to the POI, the market gave me a break of structure. The market gave me a break of structure to the downside, and that was a confirmation for me. This was the break of structure the market gave to the downside rather. The market gave a break of structure to the downside. Markets broke structure to the downside over here, and that was a confirmation for me. So, and market eventually came back into the internal structure. Market came back into the internal structure of this first BMS. The first break of structure, market came back to the internal structure. So I'm just going to get to follow the move of the market. Yes, I'm just going to follow the move of the market. So going to 1 hour time frame, when market got to that POI, it gave me a break of structure to the downside. There was a break of structure to the downside here. There was a break of structure to the downside. There was a break of structure to the downside over here. This is a break of structure for me to the downside. So I am expecting the market to continue the movement to the downside. I am expecting movement to the downside. So we had this move. Just follow me carefully. We had a higher high, then we had this higher low, then we had a break of this higher low. So this is a new creation of lower high, a lower low, then a lower high, which mitigated POI properly. So this was the last place that mitigated POI. Before breaking structure, I am not expecting the market to break this high. If market does not take this external structure, I am not expecting market to take this high because it was the last mitigated zone. So I am not just expecting the market to take this high after it had given this impulsive move to the downside. I'm not really expecting the market to take this high before taking this external liquidity, and if it eventually does, I'm just going to look out for what the market is going to do. I'm not going to force the market, and I'm not going to jump into the market. So we had this break of structure to the downside, and it was an impulsive move. This was the last area we mitigated properly. We entered into POI properly. Market entered into POI properly because, as you can see, we have this lower high, this is a lower low, then a lower high that mitigated properly, then a lower low. So we had the break of the lower low. This high did not come back into the zone, so this was the area we mitigated last, and that is why I am marking out this area. So I'm just going to go to the 15 minutes time frame, and then I'm going to watch out for what the market is doing on the 15 minutes time frame. Remember, this was the last area we had our zone mitigated properly. So after a break of structure, I am expecting the market to come into this internal structure. And what I mean by internal structure is the structure inside this range before breaking this low. The structure inside this range before breaking this low. That is my internal structure for me. So I am expecting the market to come into the internal structure. When market came back into the internal structure, it did not enter internal structure properly. It didn't enter the internal structure properly. So I have void areas. I have void POIs. I have areas of POIs that has a fair valued gap, that has liquidity void. Because if you check this place on the 5 minutes time frame, on the 1 minute time frame, you will notice we had an impulsive movement to the downside, leaving this zone unmitigated. So after we had the break of this high, I was expecting the market to come into this area, into the internal structure. Like I said earlier, I am expecting it to come into this internal structure. Now I went to the 5 minutes time frame. It was on the 5 minutes time frame I picked out my POIs. Now the first POI that I picked it because I am expecting this to be used as inducement. I am expecting this to be used as secondary inducement. I am expecting it to be used as secondary inducement. If you've not watched my video on inducement, I'm going to link the video in the description box. Just check out for videos on inducement and then watch it. So this is my secondary inducement. This is my secondary inducement, and this is my primary inducement. This is my primary inducement. So this, because this is the first break of structure to the downside, and this is the normal break of structure. So this is my secondary inducement, this is my primary inducement. So I am watching out for 2 POIs, and then I noticed that this particular POI was not entered properly. That was why I marked it out, though it is with little, like it is with little probability. Yes, I had little probability for this because market actually mitigated a little with weak. So this was a B setup. Yes, let me call it a B setup, and this was my A setup. So this B setup, I'm not going to be risking so much on the B setup, but I'm going to be risking a little much on this A setup. I'm not going to be careless, you know. I'm not going to be careless, but I'm going to increase my risk a little bit than this B setup. So when market got to the B setup, let's see how the market reacted so that you can see what the movement of the market is. When we got to this first POI, when we get to this first POI, when the market got to the first POI, you can see we had a little break of structure. We had a little break of structure which was very visible here. We had a little break of structure which was very visible, and market actually used that area. Market actually used that area to absorb liquidity. The market used that area to absorb enough liquidity to be able to go back to the normal POI. So the market used this area to absorb a lot of liquidity. A lot of people will enter the market after we had a break of this structure, because this was a first confirmation. In fact, I fell into that trap. I entered the market around this area, yes, and my stop loss was here. But I was not risking so much. My stop loss was here. It took me out of the market. Then after taking me out, I was expecting the market at that area. I was expecting the market to take my primary inducement so I could enter the market. So when market got to this area, I entered the market, and it took me out around here. Yes, because I was actually thinking this was a valid break of structure. But remember what I said, the market is always right. So you just have to adjust with what the market is giving you. You don't have to blame the market, so always adjust to what the market is giving you. So we had this break of structure, but it was not break of structure to be precise, because if we check the higher time frame, you will notice this was just a liquidity on the higher time frame, on the 15 minutes time frame or the 30 minutes time frame. So but I am executing on the 5 minutes time frame. So I was expecting the market to take out my primary inducement and react very well to this area. Immediately the market took out the primary inducement. I entered the market immediately. And my stop loss was here. My stop loss was on this particular high. My stop loss was here. I entered immediately. It took out this particular inducement, this high. I entered immediately, and the market sold massively. The market really sold. So when the market when I entered the market around this area, I took out my profits here. I took out my profits at this low. My first TP was here, and the second TP was here because I entered different positions. So I put the first TPA and the second TPA. But the reason I eventually closed at this low was because market has not given me a full move to continue to the downside. And I also remember what I said, that market is always very right, and market can decide to do whatever it wants at any time. Market can do whatever it wants at any time. So the reason I took out my profit here was because we had a break of structure to the upside. Market tested this place properly. Market tested this area properly. Now we had another break of structure to the upside. Market did not come back to this POI properly. Market used a range structure to continue this movement to the upside. So I was actually expecting the market to react at this point, to really react heavily at this point, but the market did not react heavily here. The market eventually came down to this particular low, to this POI, to react very, very well. So after I took out my profit here, I just left the market, and I was waiting for the market to do whatever it wants. And whenever I have any opportunity to enter the market again, I will be able to enter the market. I don't want to take random opportunities. So this is still okay. This is still okay. Taking a trade from this high and getting to this place is still very, very much okay. It is a good risk to reward. So out my profit here. I took out my profit here, and I am just waiting for the market to do whatever it wants. And as you can see, the market is returning back to this area impulsively. So market can still use an area around this place to continue to the downside. Market can decide to do whatever it wants. It can make this high a hunt of liquidity. Market can eventually make this high a hunt of liquidity, and market can eventually use a POI around this place to continue. So I am just waiting for what the market will do. I am patiently waiting for market to do, and that is what you should do too. Don't force the market. Always wait patiently for what the market will do. Always wait patiently for what the market is ready to do, and don't just force trade. So that is a recap on trading this volatility 101 Hz, and how I entered the trade, why I took out the profit, and all about the trade. I'm sure you enjoyed this, guys, and I'm sure you can be able to see this kind of blueprints, this kind of footprint of the market in the market every time. So whenever you see something like this, you are sure that you want to enter the market confidently without fear. So that is going to be that for this recap, guys. I'm going to see you in the next video. Keep living in the atmosphere of profits. Have an amazing trading day, guys. Bye.